Hello guys and welcome to the James Sinclair Q&A podcast show, and we also put this on YouTube. And what we do is we take all the comments from all of our videos and stuff that we've put out on the internet, and Chudders compiles them and he takes the 4 best ones, and then we give a prize to the one we like most. First time it was a call with me, wasn't it?
And then a bundle of books, magazines.
Bundle of books and magazines, which we're going to do again. That'll be the most prize, unless it's a really good one. Then we'll give the free call with me, or it might be a free coaching call with one of my team. So we do some really good prizes, and we take 4 questions from all the comments on YouTube, Linky Dink and all of those things. So if you want to get on the Q&A show, make sure you comment on the videos. We'll pull them off and we'll give you some great business advice to help your business grow. So Chudders, he's with me. He's the man that makes all the videos, edits them down, he edits the Q&A show, and he's also the auditor of questions. So give us question number 1, Chudders, and go!
So this one's from Carl Harrison.
Hello, Carl.
When is it a good time for your business to look at venture capital investment, and what is the best approach?
So, Carl, without knowing the backgrounds of your business, hey, look, I've taken investment in some of our companies before, and then I bought out investors, and all of our businesses are 100% privately owned now, other than Entrepreneurs Network, which is a joint venture partnership. So there's 2 things that I want to just quickly get into the detail here. Is number 1, let's understand whether we want to buy in intellectual property in terms of management experience, finding a good partner that can help you in this sort of stuff. And then the other reason is, why do we need the cash? Now, I'm a big fan of venture capital, angel investment money, when you can't use the bank. I would always use the bank personally. That would always be my first port of call, because it's much cheaper to finance venture capital money. They're always looking for an out, and it can mean sometimes when you go into venture capital and angel investment finance or private investment finance, you don't feel like an entrepreneur anymore. You feel like an employee to the person. Now, my view is, if you have a 5-year strategy plan for venture capital, if you want to be out in 5 years' time, then that's definitely rule number 1. That should be with you. We're not using venture capital money or investment money as a long-term plan. They have an exit plan in these situations, and so should you. So if you're trying to grow a business that's yours for 10, 20 years, and then you want to exit, I don't think venture capital is right for you. However, if you have massive aspirations and massive plans, and say you want to borrow £10 million, then you might need to use venture capital money. Now, when you go to a venture capitalist and you've got these big dreams, you need to show evidence of experience and expertise, that you have got the management ability, not the security ability, because that's why you would go to VCs, because you haven't got any security. You need to show that you've got management experience and you know how to manage the business that you're going to go into. So it should be the story that I always tell about this, Chudders, I'm sure you've heard me tell this. If you went to the bank and said, I want to borrow £10 million to open a chain of pizza restaurants, or a venture capitalist that want to own a chain of pizza restaurants, if you could say, I've been area manager or one of the managing directors for Pizza Express, I looked after 400 pizza restaurants, I understood the average customer value, I understood the highs and lows of the business, how we got customers in, what we spent on labour and all those things. If you've got tons and tons of great experience and you can prove that, venture capitalists are going to be wanting to talk to you. I think when you're going to get finance via a bank, via a private investor, via a venture capitalist, it's making sure that you understand you've got the management abilities and the expertise in the thing that you want to do. It can't just be an idea when you're going for the big money. And you should start it yourself first and go through some struggles and prove that you've got some things under your belt, and that can really help.
Awesome.
I like to answer that question, Chad.
That's good. You went off on one there.
Yeah, I did. Give me question number 2.
From Thomas Robinson.
Thomas the Tank, hello.
How about the pros and cons of using investors over finance to take a company to the next stage?
Oh my God, so very similar question here. So investors over finance, I think I did answer some of that in that last question, but let's really understand investors over finance. Investors are a bit different, well, some venture capitalists, but investors don't just bring money to the table. If you're choosing the right investor, they should bring loads of expertise to the table that should be able to open doors and steer in the right direction, that will be more than their money's worth. So let's create a scenario here to understand this. Say you live in Switzerland and you want to start an airline company and you need the money to start it up. But you also know Richard Branson, and he's got a bit of experience running airlines, so he could bring his money to the table, but he could also open lots of doors for you. You can say, right, this is the software we should use. These are the deals I've got with Boeing or Airbus to buy the planes at a cheaper price. I can actually show you some people that can help you with marketing for it. You can share some of my management team's experience, and we can grow the business a lot faster. So when you choose investors, I always think choose an investor that's, yes, got plenty of money, but B, can bring loads of intellectual stuff to the table that can grow the business faster than just finance alone. And understand that usually, like I said on the question number one, investors they have an exit plan, and if you're going to use investors, then you need to make sure that you discuss that exit plan and have the end in mind from when you do the deal. When it comes to finance, you pay it off and you can go again. So if you're looking to build a business that eventually runs under management that will pay you dividends for a long time, then I don't think investors are right for you. If you plan to sell up and you have a real plan of when you're going to sell up, then I do think investors are right.
Good stuff. Straight on to number 3.
Yeah, but look, just quickly, always try and use finance first because it's cheaper and you have control. Question number 3, Chudders. Let's go.
From Lisa Smith.
Hello, Lisa Smith.
Following one staff member leaving and one on mat leave, our salary to turnover ratio percentage is going to be spot on in the next quarter. But we're going into our busy period and we will pick up new clients. We are likely to have to turn business away. Do I hire, maybe part-time? Do I take advantage of the business and risk my salary to turnover going bad again? Or do I accept we are fully booked within our limits? Just feel as though we are standing still.
Very interesting question. Now, Lisa, hello. I know you're an Entrepreneurs Network member. Those of you that are not Entrepreneurs Network members, one of the things that I teach is one of our 3 KPI rules, and that is keeping your labour to turnover ratio closest to what you've set. So I don't know what it would be in your hair salon. Say maybe it's 40% of your turnover. Your labour is your turnover is labour. Sorry, it might be 35%, 30%, maybe 50%. Whatever you've decided it is for your industry, and I don't know the hairdressing industry, so you have to forgive me, Chudders. But let's. So the question is, someone's leaving and it's going to bring all your labour percentages in line, which is going to increase the profitability, but it means that you're not growing the business. So what do we do in this situation? Because you want to employ someone, but you can't fully fill their capacity yet, so that's going to put your labour and your labour lines out of sync. So what you need to do, Lisa, is understand that that's going to happen, but give yourself a deadline, say 3 months, to bring everything back in line. What we don't want to do is let that continue on forever. So give yourself 3 months, say, right, okay, we're going to invest now into this person, which is going to grow our turnover, and we're going to do that for 3 months. Now, if that doesn't happen in 3 months, then we need to look at it again and say, right, what can we do to change that? And then in that 3 months, you need to get on the marketing and make sure that person is fully at capacity. And if they're not, then obviously you have to have that awkward conversation in 3 months. So even in our organisation, we go out of our labour to turnover ratio guidelines if we think it's going to grow the business, and we put a deadline on it. But if it doesn't work out, then we have to make those difficult decisions to bring it back in line, because labour is the biggest cost to our business, as it is most businesses, and if you don't get it under control, it can be lights out. So it's very important that we look at it constantly. But hopefully that answers your question, Lisa. What do you think I did there?
Another solid answer.
Another solid answer. Thank you very much, Chudlington.
Yep. So, fourth question, last question.
Last question on the big James Sinclair Q&A show, available on iTunes, watchable on YouTube.
Over on YouTube, Andy C has commented.
Andy C has commented on YouTube.
Hey James, said, really thinking of joining the EN, but just for insight, can you please give me some marketing ideas as to how much you would market a new lettings agency in my local area, and how you would acquire landlords for our fully management service? Thanks, Andy.
Hi Andy, so you've got an estate agent that focuses on landlords and lettings. I would go to networking events and build a strong network around you. So I would go to all the auction houses where you are when they sell properties, say to them, look, we'll do you a special deal, we'll find your tenant for free, and we'll charge you 5% management fee for the first 3 months. So when someone buys a house, they get to come and talk to you. I would make sure that you go to your local newspaper and say, because newspaper property sections do get read still, nowhere near as much as they do, but some people do, especially woofdies, well off over 50s, do still read local newspapers and ask to put an article in those local newspapers about what you think's happening with property trends, and get that out there so that you are seen as a person of expertise in your area, a person of expertise, and they can then read up and see your content every month. Or every week if it's a weekly newspaper. I would also be writing vlogs and articles and getting them into other property magazines, and that's what I would be doing. I would be building up a real key expertise basis via articles, videos, LinkedIn posts, and I would really buy customers by offering stupidly amazing offers to get them into you, and try and source properties for landlords. Create a secret Facebook group in your area called Landlords. So if it was where I lived, Landlords for Essex, and you create a community in there, and you get landlords that have got properties in there, and you just offer properties that you found that are up for sale, and you say, look, this is a really good one, I reckon you can get this rent on it, this yield on it, and we'll be prepared to manage it for you for free for the first 3 months. Now, coupling together on that, there are so many property Facebook groups where you can post great information, localised ones as well, all over the country, secret Facebook groups, closed groups. You need to be in them, and you need to be prominent in them, giving great expertise, and eventually things will start happening for you.
Good stuff.
Thank you very much,
I feel like
Charles.
this is wrapping up to be the best one yet.
The best one yet. So, ladies and gents, thanks very much for listening to the James Sinclair Q&A show. Whoa.
We need to pick a winner.
We need to pick a winner.
I'm liking the very first question from Carl Harrison about venture capital investment.
Okay.
You gave the best answer for that as well, I think. So.
Oh, thank you very much. Well, we'll send a bundle of prizes in the post to Carl. Maybe it's going to be a book by me or a book that we think can help you. And we'll get our team at Entrepreneurs Network to send that in the post to you. Ladies and gents, thanks for listening to the Big Q&A show. I've been James Sinclair, and that man has been...
Michael Chudley.
Chuddington. What's his name?
Or Chudders.
Mike Chudley. No one
We say
knows
this
him.
every time.
Yeah. That is your name. This is the James Sinclair Q&A show, brought to you by the Entrepreneurs Network. Thanks for listening. We'll be back soon. Bye-bye.
See ya.